So happy Monday. It's January 23rd, and we're getting ready to kick off a new week as we prepare to close the first month of the year. And I just want to give you guys a tool to approach looking for your setups or looking for your investments. I just want to give you like a different way to see things or a different way to kind of approach it other than using scans. Scanning is kind of like if you're looking for a quick trade, you can just you can scan. You can have whatever charting system you use or charting app you use. You can have them. You can put in your parameters for the scan and have them run a scan. I want to show you kind of how to pull back and see the bigger picture. So there's different sectors in the stock market. So here we are. I found Seeking Alpha page on the different sectors, and it kind of just breaks it down. So I want to just run through those real quick, right? There's 11 different sectors, and you can see what the sectors are here. All right. So most of the stocks that you're going to trade, or mostly all of the stocks you're going to trade, fall in these sectors, right? So what you can do is you can go check and see how the overall sector is doing in comparison to the overall market. So if the market is rallying, the market's going upwards, but a sector is kind of, lagging behind, it hasn't hit the sector overall hasn't started growing yet, then, you could probably open up a list of all the companies in that sector, or at least the top companies, the top holdings in that sector, or the top companies in that sector, and you can chart them. So, or I even say the top holdings in the sector. That's because you can look at an ETF for these sectors. So the ETFs will have the top holdings, the top companies, right? And an ETF is just like a basket of stocks. So you can have the technology sector ETF, or you can have the consumer staples sector ETF. So then you can see what's being held in there, and then you could just go chart that. So I'm going to show you guys how to do that. So if you know where the SPY is at, you know where overall the S&P 500 is at, and then you know which sector is lagging behind, then you can go find the gems on the trades that, are still setting up, what to keep your eye on, how to find new companies to invest in, how to find new companies to trade, right? So you just have to be aware, and you have to put in time on the charts. So, all right, cool. You have the sectors here and the explanations for the sectors, right? And remember, there's 11 different ones. And then if you were to all right, so hold on. Here we are on stockcharts.com. You can go to charts and tools, come over here and go to sector summary, right? So here's an ETF that represents each sector, and you can chart this, right? You can click this button and chart it. So we'll start off by looking, where's the SPY? All right, SPY's at 395, right? We've seen the SPY consolidated, and then there was a breakout, and now we're kind of staying in this range of about 400 to 387. We've just been bouncing for the last few days in that range, right? So you want to know. So boom, there's the consolidation, and then we break up, right? So cool. We had a small little rally, because we reached the bottom was 374 ish, right? So we had a cool little rally. We rallied about 25 points, and you want to know what hasn't rallied, or what's getting beat up, or because remember, the whole goal is to buy things at the bottom, right? You want to buy things when they're low. You want to buy things when they're hit, and you have to beat this through your mind. You have to. There's no two ways about this. You have to beat it through your mind. So I like to use the analogy of a house, right? So imagine you show up in some neighborhood because you're looking at houses. You and your girl, or you and your dude, whatever. You're looking for a house, and you see this house, and you really like this house, and the kitchen is cool, and it has a spacious backyard, and everything you love, everything about this house, and they want $400,000 for this house, and you think that's reasonable. You're like, all right, 400,000. All the other houses are kind of, the comps, they all look about to be the same, right? You get an inspection done, they don't find much wrong with the house. You get an appraiser, he comes out, he tells you, yo, this house is worth about 400 grand. So you're like, cool. You really like this house, you're ready to pull the trigger. Then the next day when you just sleep on it, the next day you wake up and there's some crisis going on in the world, and I don't know, something happened over in China which affects the shipping in America, and now the stock market is getting hit and people are selling their assets, and it's creating a little panic, and now people are starting to sell their real estate, right? And let's say that house that you liked at $400,000 is now $300,000, right? You have to understand without a shadow of a doubt that this is the same exact house. You have to know this. It's still in the same neighborhood, right? So you like the fact that it was across the street from the grocery store. You like the fact that you can bike to the gym. All these things are still true. It's still across the street from the grocery store. It's still down the street from the gym, so you can ride a bike. The school system there is still good. The kitchen, which you said you liked, is still the same kitchen. The backyard is still spacious. Nothing about this house has changed. So why would you change your opinion on this house, right? And that's exactly what happens in the stock market, right? So when you're buying stocks, you're just buying businesses. You're just making investments inside of businesses. So you have to think that there's businesses out there that grow year over year over year, decade over decade over decade over decade. They just become more and more and more and more profitable. But the stock market will price them different, right? Sometimes the stock is trading at, let's go. Sometimes the stock is trading at $390. Sometimes it's trading at $215, right? And this was 4 months apart, right? The Microsoft at $290 is the same exact company as Microsoft at $215, right? So we need indicators, and we use math, and people use math to create these indicators. So you start to have an understanding on you can kind of paint a picture of when things will stop falling, right? Because of course you don't want to buy. You see, it used to be 290 and now it's 275, and now you buy, but now it's down to 250. You don't want to end up in those situations. So we have indicators, and we have things like that where we can kind of try to make sense of all the chaos. But what I want you to understand is that the company is the same exact company. Matter of fact, if you were to go into Microsoft's, like, let's say you go to like a store that they have in the mall where they're selling like phones and computers or whatever, right? The employees who work there probably couldn't tell you what the stock price is, right? They're just running business as usual. They probably can't even tell you that the company made 10% more money than they did last year. They don't know. They're just going and operating there every day. It's the same exact company. Microsoft at 340 is the same exact company as Microsoft at 220. Right? So you have to, if you understand that, and if you can grasp that concept, then you'll understand the power of a discount, right? That you can buy these things when nobody wants them and then turn around and sell it to people who do want them, right? So let me not get off track. So for instance, last trade that I went in, we were buying SPCE, we were buying it here. And we just started selling. We sold some here, we sold some here, and I still have some, right? So this is a weekly. Let me get down to a daily so you can see. Look, bought in here, sold some here, sold some here, sold some up here, and I'm still holding some. Right? I just bought it. It's the same company. The company was up here at $8. It was down here at $2.50. I got in at $3.50. Right? So you're able to grow your money. So just showing you different ways where you can identify which companies are being hit and how to find them, right, without using the scan. So you can always go into find the sectors. You can even find the ETFs for the sectors, which I was showing you, charts and tools, right? You can Google it too, stock market sector ETFs, sector summary, and you can look at the chart of the ETF, right? Okay, so cool. The XLC is holding up. XLK Tech, whatever, right? So what I found, what I want to go through is here, healthcare, the healthcare sector, right? So I'm like, okay, cool. So if we were to look at this like an individual stock, then we would say it's trading in a range, it's trading in a box, it's consolidating, right? And then we have the histogram ticking upwards, and then we'll just wait for the MACD to cross over, right? So I think this sector, the overall sector itself, will show some strength soon. So what I'm going to do is crack open that basket and go look for the individual stocks that are hit, right? Does it make sense? The ETF is just a basket of the stocks that are in that sector. So I'm going to crack open that basket and go look and chart each individual company in there. So for instance, all right, let me show you the Google. You can go XLV top 25 holdings, XLV top holdings, XLV all holdings, whatever. Ycharts.com. I like them. And then here you got the 25 holdings and the XLV, right? And then you can just get to charting. Johnson & Johnson, look at this. All right, cool. A quick observation, the RSI is low, right? So what you want to do before you buy this is you want to see it consolidate and trade sideways a few days. I think that it wicked down here, but I think it can keep going lower and maybe go to like a 25 RSI. And the reason I think that is because if you come here, look at the weekly chart, right? The weekly chart, it blows through this 20-day moving average, and the next level of support is, that's a level of support, that's a level of support, right? This is a significant level here too. So I'm thinking, okay, it could probably go to 165. Cool, but you have your eye on it, right? And then look, also the weekly, the MACD has crossed over to the downside. The histogram's ticking to the downside. This is going to have a lot of selling pressure, right? That's what we're expecting. So I wouldn't be buying here, but I would for sure. Johnson & Johnson's now on my radar. Cool. Let me get some money to the side. Let me put $5,000-$10,000 to the side, whatever your trade size is. So you could trade this right back to the extreme. You buy at this extreme, $30, 30 RSI, and you'll sell it to people when the RSI goes back up to 70, right? You're just going to trade. You can just trade it from extreme to extreme. People get fearful. They sell off. They sell off. They sell off. The bad news comes. Blah, 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 blah. Starts to consolidate. You buy it. The good news starts pouring in. People start buying it. It goes up. The greedy people who want to buy at the top, we're going to sell them the shares. We're going to be the people who buy down here, and we're going to sell it to the people who want to. So when somebody's seen, you have to think somebody's seen this stock at $5.80 and said, I want that. And I said, cool, I got some shares for you. Here you go, bro. And then it came right back down. All right. There's another player on the side of this game, right? So anyways, cool. We look at Johnson & Johnson. You could look at United Health Group. Look at that. There's so much weakness here. Maybe I would consider even trading options here. I think this is ready to go. This might even go today. But just being aware of what sector is lagging behind the strength of the S&P 500, and then what companies in those sectors are the reason why it's lagging. So it's not pumping for a reason. There's companies that are pulling it down, pulling the whole sector down. Go find those companies, because those are going to be your trades. Those are going to be your investments. right? MRK, that's a nice dividend payer. Nope, next one. You could just keep going until you find something. So this will always give you an idea of what's going on in the entire market by busting open an ETF for a sector and just looking for a play, looking for a trade. And once you get good enough, you'll know exactly what you're looking for. You'll see a setup and you're like, that's the one I want. Like this. Boom. Here we go. The sell-off, the consolidation, it trades sideways. The MACD is getting ready to cross. The histogram is ticking upwards. And you can say, this will probably run to $490 in the very near future. So whether you want to trade options with that or you want to trade stocks with that, boom, there you go. It'll probably run right back to that 200, where the 200 and the 20 meet. All right. And then it works the exact opposite way too, where you have all the strength here. The RSI is hot. So the people who see this and they're not like, hey, maybe I should cut some down, then guess what happens? The whole stock just, it falls on them. The RSI goes low, people buy in here, and then the pattern just repeats itself. All right. So this is something you may want to look at right here. Right. So once you understand, I can, right when I clicked on this, okay, this is set up ready for me to go. That was the level of support. It came through it. You can just sit here and draw all the significant levels to the upside and to the downside. Right? And then you can, that's how you're going to set your price targets. Boom, boom, boom. But you should be able to do this. But instead of just looking at SPY every day or looking at Tesla every day or only trading tech, go bust another ETF open. It's for some reason, people tech. Bro, Apple could fall the sky and something like this could run. Put that in wrong. Not, that was gold. Nope, not set up the right way. And this is what you can do every single day to put your reps in and to get better. I'm at CI, not SF. Kind of like that too. And you can just go down the list. So over here, it'll tell you what percent of this pie, this basket, what percent of this basket is this company for this ETF, right? So you know in the XLV United Health Groups it has the biggest piece of the pie, 8.9%. Johnson & Johnson, 8.9%. Right? Eli Lilly, 5%. So you got 16, 21%. There goes a fifth of the entire, the fifth of the entire pie is in these three companies. But just go down and chart them and get used to charting them. So then you're not asking, oh, what should I be trading? What should I be trading? Look at this. If this blows through this, if this shows strength, guess where it's going? Back up here. Back up here. 516. So when this runs from 497 to 518, 516, and then it stops running, and you're like, how did you know it was going to do that? The charts, bro. How did you find the company? I hear it every day. I hear it every day. All right. So let's go. Where we at? XLV. Move on to something XLE. Let's go look at energy. All right. Go down your list. Should be able to look. I'm not even explaining it to you guys. I'm just look at the chart really quick and then move on to the next one. Right? If I don't see a trade, not interested. Don't see anything that's worth investing in. It's not that the company's not worth investing in. It's the price the company's trading at right now is not worth investing in. You could read it right away. Just look at the chart. So you have to be aware of where all these companies are at. OKE, big dividend payer. You find a lot of dividend payers in this sector. Maybe you want to trade this to the downside because you think it's coming down here to 67. Maybe you buy a put today. All right, so a lot of the questions, oh, how did you find this? How did you know about this? How are you finding these companies? Come on, bro. Get to work. All right. Get to work. If you need help actually charting, go watch my courses. They're in the Chris's free resources. Start with stock market gems and then work your way to dividend income empire, intro to options, all that good stuff. But here's the perfect way to just look for trades. Just hit the charts, bro. Like, this is what you should be doing every day. Right? If you can tell me who's in the NFC East, but you can't tell me what sectors are, right? You can't name 5 out of the 11 sectors, but you could tell me who's in the NFC East. Football doesn't pay you. You're a common fan. This could pay you forever. All right? Get to work, y'all.